So, should we buy or sell this furniture stock? So, first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So, under the other themes, I have a theme called Euphoric Spending. These are basically companies that make not like super premium necessarily, but the things that cost a bit more money, meaning things that you buy when times are good, but not that much when times are bad. So, this furniture stock that has a name that I might not actually be able to safely even say on social media. This furniture company, 10% from the 52-week low, minus 54% away from the highs. Just to be on the safe side, I actually think I must remove one O from this name actually. If there ever was a company that might should consider a rebrand, I think it's this one. I don't know the etymology. Well, so here is the etymology of the word. So basically, what it used to mean. So this word, it means one who or that which hooks. So basically, to like take something, attach, grab hold on. But it seems like the word changed its meaning around 1860, well, 1840-ish, basically. So since 1845, the word means what it means now. Okay, but anyway, here is the company's website. Certainly looks more premium. Yeah, very nice couches. So basically, this is more discretionary products, but very nice. I think that the designs here are very good. One of the issues with a lot of modern furniture is that the designs are just very boring. You have a lot of rectangles, maybe you get a circle, but that's it. There's very little decoration, but this looks very much premium. So this company, it has seen its stock fall down very substantially. So yeah, it is very discretionary, but maybe it has fallen down to a level where there might be value. So there is horizontal support way back here. We see that almost all of the gains here between May 2020 and June-ish May 2021 have been given back. Major repricing of the stock. So it's an interesting place to consider this stock from a more bullish perspective. Here on the daily data points, you could make a strong case that this looks like a rounding bottom information. That is a bullish technical pattern. You see here this green 50-day moving average. It has been very strong resistance. So let me just draw that in. Short, you short, you short, you short, you short. But as of late, it's gotten a bit more precarious to short the green 50-day moving average. It is becoming more and more of a support level. And when you are burning the bears like that, you spook them out of their short positions. That doesn't mean that there are not, bears still shorting this furniture stock, but they have very good reason to feel more uncomfortable about doing it. Because any bear who used, some place above the 50-day moving average as their stop level for the short, they will have, they have gotten burnt a bunch of times now and probably are looking for better opportunities. So this is interesting. Looking at, the MACD here on the weekly, so we do have a strong buy signal. RSI and PPO are emerging from levels that have triggered major lows in the past. Looking at the daily data points, accumulation distribution is very much corroborating the rally. So there are definitively buyers here. So something is afoot with this stock that is potentially rather bullish. So in my notes, I write 50 daily moving average support-ish. It is sort of support, but not fully yet, but there's something here that is more bullish than bearish. So I do give the bulls a 3 here, and I also write on the long-term radar, rounding bottom. So let's look at the seasonality. So to the right here, over the last 5 in green, 7 years in blue, 10 years in red, at least from 19-ish of August into early September, we usually see some strength for this stock. To the left here, over the last 5 years, August is one of the worst months. Over the last 10 years, August is the worst of all months. And then big picture, the last 20 years, August is officially the worst month for this stock. But here's a big but. That also means that August could be one of the best months to enter a bullish position, meaning when you have already seen weakness in August, it could be a good time to buy because that is when the low usually forms because, as you can see, September, October, November are some of the strongest months for this stock. So the current month could be a good entry opportunity. The coming months are bullish. This is interesting. I give the bulls a 5 here on the seasonality. This is potentially rather interesting. So let's look at the fundamentals. So this is, a SAX. We don't get any style scores or rank. The market cap is a bit, more small-ish, 197 millions in market cap. The dividend is huge, 4.88%. So you get yield. That is very, very beneficial for those who, especially when you have a rounding bottom, that is when that yield is very nice to have because rounding bottoms, they can take quite some time to form. I've seen rounding bottoms take like years to form. And if you then get a yield while waiting, then it's not that bad really. Okay, so here is the insider activity. So June, buy, and also July. We do have, here is April, insiders are selling and buying here. Also some selling and buying, but so far, the only moves we have seen is insiders buying the stock. That is interesting. Looking at the consensus estimates for this unspeakable furniture stock, we have a whopping number of 1 analysts covering the stock with a 107% bullish price target. Yeah. So we have very little data when it comes to the fundamentals, but the data we do have is interesting. So I give the bulls a 3 here on the fundamentals. Yeah. So let's look at relative performance. We have 38% with the S&P 500, 48% with the XLI, which is the consumer discretionary ETF, then 61% with the XRT, which is the retail ETF, then minus 86% with the dollar index. Daily data points, 85% with S&P 500, 86% XLI, 92% with retail, and minus 92% here with the dollar index. So what happens with the retail ETF, the XRT like that, is going to have a pretty substantial effect on this furniture stock. So here we have the red 200 week moving average, and XRT is showing us a very nice rally. But there's a bit of a but here. We have seen a bit of a strong rally already. We are now heading into some horizontal resistance levels. So on the topic of rounding bottoms, we do have that here, a nice rounding bottom that has played out bullishly. Yeah, that's nice to see. We have smashed through the blue 100-day moving average. Yeah, let's look a bit at, RSI and PPOs. Yeah, looking at the weeklies, there could definitively be more left in this rally. On the dailies, yeah, we are approaching a bit of a dangerous territory here on the RSI and also the PPOs. Even the 100 daily moving average PPO here in blue, if we zoom in a bit here and look at the previous time we had this reading, it was during this rally here. Yeah, it got a bit dangerous. So we are very close to a level that is historically dangerous for the XRT. Well, to be more specific, it is historically dangerous if you are a bull. It usually has been a time to at least tighten your stops. So here is the relationship between the furniture stock and the retail ETF. And we have a new all-time low. meaning we have seen very substantial underperformance from HOFT. Let's look at the seasonality here, like that. Well, actually, we do have some interesting readings here on RSI. We are in a rather low end of the range, so we usually tend to see some mean reversion for HOFT, meaning it might outperform a bit. Looking here at the seasonality. So we usually see a bit more weakness from HOFT leading into 19-ish of August, but then it seasonally tends to outperform the retail ETF heading into early September. So that's interesting. Here is the relationship between the retail ETF and the S&P 500. Do we have, you could make a case that we have a bit of a wonky inverse head and shoulders pattern. This could be the right shoulder. It could mean that retail is going to outperform the S&P 500. So the reason why retail could outperform is that like classical retail stocks might benefit more from inflation than others. Other sectors, that is. Let's look here at seasonality. So yeah, the seasonality here for retail is pretty bearish heading into the 14th of October. So as we approach, the Black Friday announcements, that is when we usually tend to see a bit of a reversal where retail begins to outperform the S&P. I give the bears -2 on relative performance. So we do end up with a 2.3 here in favor of the bulls. The key signal is that we do have 50 daily moving average support-ish. We also have that rounding bottom, so things could become interesting for this stock. It has, seen a very substantial pullback. So a lot of the concerns about people cutting back on their spending, it has been priced into this stock already. And that's, the wonky thing about the market is that it is forward-looking. So when there's a lot of talk about, worries about inflation and people cutting back their spending, when that goes mainstream, at that point, you usually have already seen a very substantial correction in the discretionary stocks, and some of them could even become a bit undervalued. So it doesn't mean that this stock has become undervalued yet. We did have a bit of a paucity, a limitation when it comes to how much fundamental data we got. But that also could, contrarianly be an opportunity, because there could be a bunch of stuff that is not really priced into the stock. We have some time left, so let's look at some other stocks in this theme, one of them being Starbucks. So starting here with the weeklies, we have seen a strong rally for Starbucks. We are approaching a bit of a dangerous indicator, and that is the red 200-week moving average. So the easy gains on Starbucks have already been made. Also on the dailies here, you have the 200 daily moving average in red right above us. So a bunch of key resistance for Starbucks. Let's look at Ralph Lauren. Yeah, weekly data points. This is a very messy chart, very erratic behavior. So it's one of those charts that can be frustrating for both the bulls and the bears. Here is RCL, Royal Caribbean Cruises, and we have seen this massive repricing of the stock. We got something that is a bit double bottom-ish. So you see here that during these concerns about inflation and, the war, this stock almost went back to the C19 lockdown lows. So it's one of those situations where it got undervalued, and that is why we have seen a rally. So that's just the thing. The market does not trade the present, it trades some kind of future. The tricky thing is really knowing which future is being traded. And that is why it is very beneficial to look at a bunch of different indicators, so technical, seasonality, fundamentals, and relative performance, because that makes it easier to capture the move when it is early. If you wait until it goes fully mainstream and all, the talking heads are, chattering about it, then usually it is a bit too late. So yeah, it just is the way it is. To get more data, just go to diamondarm.com.